Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list you're ever going to need as a dividend investor. In this series, I outline the 5 most important dividend stocks that you need to know about going into each and every week.
Like clockwork.
With there literally being thousands of dividend stocks out there, how can I possibly narrow it down to just 5? Well,
I'm glad you asked.
I start by looking for any stock that has an ex-dividend date for the following week. In this case, that's July 8th through July 12th, which got me down to 84 stocks. Then I require those remaining stocks to have a dividend streak of at least 5 years, which brought me down to 30 stocks. And finally, I like money, so I look for the stocks that have a history of outperforming the S&P 500 so I can make the most of it. This week, there were only 11 stocks, or 13.1% of the original list that met all of these requirements and deserved my deeper attention. From there, I spend countless hours to bring you guys the 5 most important stocks that you need to know about going into each and every week. So if you could just take 2 seconds to leave a like on the video, we'll call it even.
Tit for tit.
Thank you for that. And now let's begin this list with number 5, Accenture, stock ticker ACN. ACN is a quarterly payer in the technology sector, paying $5.16 per share per year with a forward dividend yield of 1.69%. ACN's been paying and growing this dividend over the last 13 years. They have a 3-year dividend growth rate of 12.79%. A 5-year dividend growth rate of 11.56%, and a payout ratio of 40.46%. At the time of recording, Accenture was trading 21.1% off of their 52-week high. They have an ex-dividend date of July 11th with a payout date of August 15th. And looking here at this chart, you're going to be able to see the return of $10,000 both with and without dividends being reinvested compared to the S&P 500. In this case, ACN would have brought back $44,708.26 compared to the S&P 500 bringing back $33,397.77. That's a difference of $11,310.49 on the side of ACN. Down here at the bottom, without reinvesting those dividends, ACN would have turned into $41,579.26. The S&P would have turned into $30,663.01. That's a difference of $10,916.25. And the difference between reinvesting and not reinvesting those dividends was $3,129. Next up, coming in at number 4 is Erie Indemnity, stock ticker ERIE. Erie Indemnity is a quarterly payer in the financial sector, paying $5.10 per share per year with a forward dividend yield of 1.39%. Erie Indemnity's been paying and growing this dividend over the last 34 years. They have a 3-year dividend growth rate of 7.23%, a 5-year dividend growth rate of 7.22%, and a payout ratio of 45.13%. Now, at the time of recording, Erie Indemnity was trading 13% off of their 52-week high. They have an ex-dividend date of July 9th with a payout date of July 23rd. And again, looking here at this chart, we have $10,000 while reinvesting your dividends that would have brought back $62,559.97, outperforming the S&P 500 by $29,162.20. Down here at the bottom, without reinvesting those dividends, that would have turned into $54,160.51, outperforming the S&P by $23,497.50, and the difference between reinvesting and not reinvesting those dividends was $8,399.46. Next up, coming in at number 3 is a stock I personally own in the Anyone Can Invest portfolio, and that's MasterCard, stock ticker MA. MasterCard is a quarterly payer in the technology sector, paying $2.64 per share per year with a forward dividend yield of just 0.59%. MasterCard's been paying and growing their dividend over the last 13 years. They have a 3-year dividend growth rate of 13.06%, a 5-year dividend growth rate of 17.03%, and a payout ratio of 15.91%. At the time of recording, MasterCard was trading 8.53% off of their 52-week high. They have an ex-dividend date of July 9th with a payout date of August 9th. And here we got that $10,000 with the dividends reinvested. MasterCard would have turned into $62,559.97, outperforming the S&P 500 by $29,162.20. Down here at the bottom, without reinvesting those dividends, MasterCard would have still turned into $60,660.13, outperforming by $29,997.12, and the difference between reinvesting and not reinvesting those dividends was $1,899.84. And with that, we're about halfway through this week's video. Leave a like on it if you haven't already, as it helps show the support for the series. And also, I want to know in the comments down below if you guys own any of the stocks mentioned in today's video, and if so, how they're doing for you. And if you don't own any of them, did any of the stocks I mentioned pique your interest? Let me know down below. But now, let's get to number 2. Coming in at number 2 this week is Cadent, stock ticker KAI. Cadent is a quarterly payer in the industrial sector, paying $1.28 per share per year with a forward dividend yield of 0.43%. Cadent's been paying and growing their dividend over the last 12 years. They have a 3-year dividend growth rate of 6.52%, a 5-year dividend growth rate of 5.69%, and a payout ratio of 11.65%. At the time of recording, Cadent was actually trading 16.41% off of their 52-week high. They have an ex-dividend date of July 11th with a payout date of August 8th. And looking here again, we have that $10,000 investment up at the top while reinvesting the dividends. Cadent would have turned into $84,450.40, outperforming the S&P by $51,052.63. Down here at the bottom, without reinvesting the dividends, Cadent would have turned into $78,829.06, outperforming the S&P 500 by $48,166.05. And the difference between reinvesting those dividends and keeping them to yourself was $5,621.34. And here it is. The number one most important stock you need to know about going into next week is another one I also own in the Anyone Can Invest portfolio, and that's Intuit, stock ticker INTU. Intuit is a quarterly payer in the technology sector, paying $3.60 per share per year with a forward dividend yield of just 0.55%. Intuit's been paying and growing their dividend over the last 13 years. They have a 3-year dividend growth rate of 14.48%, a 5-year dividend growth rate of 14.34%, and a payout ratio of just 18.86%. At the time of recording, Intuit was only trading 2.47% off of its 52-week high. It has an ex-dividend date of July 10th with a payout date of July 18th. And here's why this one took the cake. That $10,000 investment into Intuit 10 years ago while reinvesting the dividends would have brought back $88,419.43, outperforming the S&P 500 by $55,021.66. Down here at the bottom, if you wanted to keep your dividends, that would have still turned into $83,703.17, outperforming by $53,040.16. But the difference between keeping those dividends and reinvesting them back into the stock was $4,716.26. Remember to use the comment section down below to let me know if you guys own any of the 5 stocks mentioned in today's video and how they're doing for you. And if you don't, if any of them piqued your interest.
Oh, wait. Before you go.
Now, in this video, I spoke a couple times about the Anyone Can Invest portfolio. And if you guys are curious about that and haven't seen the latest episode, make sure you check that out right here. But until next time, see ya.